Time to get a conversation going with Rakshit Ranjan of Marcellus Investment Managers. Rakshit, thank you very much for joining in. Tough time for a lot of people in the market who are not looking at as much a long term as I suppose you are and your investors are in your portfolios. But a little more on the here and now today in the conversation, Rakshit. What have you been doing as you've watched this mid-cap fall? And the mid-cap index is down 10% from its high. What has your stance been? Are you out shopping for anything new or just sticking to what you already have in the portfolio?
Well, sticking to what we have where our conviction levels are the highest, but at the same time, very, very conscious of the number of opportunities that come in the way of long-term investors in times like these. If there is a significant correction, either in overall portfolio values, or if there is a differential correction in certain high quality stocks, let's say, I don't know, maybe it could be in banking or in some other sector, etc. So then those become very attractive rebalancing opportunities at times like these. So in some of our small and mid cap portfolios, we have been sitting on higher than normal cash levels in the more recent past, and we'll be looking to deploy that as well. But yeah, waiting for opportunities. Some of them are coming our way, and we'll be acting on them as and when they appear. You
said banking. What else?
Well, there are a couple of changes. So, for instance, in the consistent compounders portfolio, we added one stock 2 months ago. We are in the process of evaluating whether valuations become significantly attractive in stocks outside of our current portfolio, and hence create a switch opportunity. So all of that is on full steam.
So Rakshit, take us through some
events here. Yeah, sorry, go ahead.
So take us through some pockets which, where you're perhaps waiting for that correction to come through, maybe a little bit more of a correction to come through before you'd want to venture into those pockets. But, are there any specific areas that you're waiting for that to come through in?
Yeah, so let me put it this way. Over the last 12 to 18 months, there have been pockets where in the broader stock market, short-term tailwinds lifted fundamentals up, and the sell-off will be probably more intense there. We don't want to participate there because if it was, let's say, a commodity producer which benefited from massive commodity upswing last year, or some other liquidity flow related aspect which led to the share prices going up for some parts of the stock market, and those are correcting, we won't be touching those. But there are some spaces where either in the wake of COVID going away, or because of Russia-Ukraine war and hence the impact on commodity consumers, or there were lots of sort of places where FII outflows in the second half of FY23 led to high quality stocks coming under the pump, and those places where there is irrational pressure become very attractive for us. So yeah, so those are the spaces where we'll be allocating more.
So Rakshit, but we're trying to get to simpler names here in terms of maybe just themes or sectors. Are you referring to large financials? And when you say commodity consumers, what areas would you perhaps explore?
So yes, private sector banks, the highest quality. I think when the external environment becomes difficult, when net interest margins are gradually declining for the overall sector, when the credit cycle has peaked out in terms of it hopefully going through a more normal phase rather than a very benign phase, the private sector banks and the top tier NBFCs will outshine versus the broader banking and the NBFC sector. So yes, that's one place. And then there are some of the others. So for instance, when I talk about commodity consumers, talk about, let's say, paints, adhesives, even some packaged food companies. So for instance, Nestle is in our portfolio, Asian Paints is in our portfolio. And these are stocks which, for a variety of reasons, have had a massive disconnect between their fundamentals and valuations. Either fundamentals have been depressed because of crude oil price rally last year, so on and so forth, or It's just the liquidity aspect where, as I said, there might have been some FII outflows in some of these names. So they become very attractive at points like these. And you can actually see jaw opening when results get reported from this quarter onwards, because the tailwinds are out of the way. So just to give you an example, when you compare Nestle against, say, Unilever and ITC, right, the jaw opening is visible now. When you compare the profit growth of the private sector banks versus, I guess, the rest of the banking sector in the next couple of quarters, you'll see a massive jaw opening, hopefully. So that's where I think it'll be a combination of fundamentals as well as days like today, weeks like last week, where you'll get opportunities to buy more into these stocks.
Okay, got that. Rakshit, thanks a lot for taking us through all of those ideas and maybe some pockets where, you could look to deploy cash now that we're getting a little bit of a correction coming through, and maybe are set for a little bit sharper as well. Thanks for joining us today. By the way, while the market is still around 260 points in the red, I do want to point out that some of the tech stocks have moved up quite well. HCL is in the green, but even names like Infi now at the high point of the day, Wipro at the high point of the day as well. Of course, there's no respite in Tech Mahindra. That is still one that is actually also moved up a little bit. But the entire IT pack, at least the larger names, are seeing a little bit of a move higher. So I'd watch closely for that pack. And this is in spite of the fact that the Nasdaq was down around 2.5% as well. We don't